Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and 10-year note yields holding a key support. We're right around that 215, 216 level, well below the 225 that it's going to take to really knock us off our trend, but still well above the 210 low we saw earlier this year. So what's going to happen next? Well, market volatility is telling us not a whole lot, and if lower market volatility is any indicator, it means that yields are going to continue to go lower. It's going to take some kind of a spike higher in yields and a move lower in price in order to see market volatility spike, and we just haven't seen that. We've seen kind of a flat line, which when volatility doesn't go down, we kind of consider that an up day, but when we have news like we have today out of Texas, and we've got news out of Venezuela, and we've got sort of uncertainty all around the economy, we would expect volatility to be higher, and it isn't. So I think right now we're going to continue in that trend of lower yields and higher bond prices. And what does that mean for the rest of the week? Because we've got key inflation, we got the PCE data, which the Fed closely looks at. That's not going to look to really see any substantial changes. Likewise, we have employment, which really hasn't been the problem with the economy. We've seen the job market continue to add and sustain those adds that we've seen over the last year or so, and that isn't really the problem. The risk and the fear with the employment report is, what if that starts to crack? What if the lower inflation numbers don't rebound, and what if the jobs numbers start to turn? That would be the real risk here. So right now in the bond market, we are waiting for more hard data. The Fed really gave us no indication last weekend at Jackson Hole as to where they're going, and I think that all that uncertainty is going to lead to lower yields, and if we continue down that track of lower yields, it keeps us within the trend, which really means lower volatility. So bond bullish here on Monday, but we have some key data later this week that will tell the tale of the tape. This is Todd Colvin coming to you from the floor of the CME Group.